We are back at 8:42 this Friday morning. In the wake of more people working from home and rising interest rates, there are a lot of dynamics at play in the commercial real estate market.
UNC Chapel Hill finance professor and real estate expert Dr. Jacob Sagi is with us this morning. Dr. Sagi, nice to have you with us this morning on Queen City News. How are you?
I'm well, thank you. Thank you for having me.
Well, we want to pick your brain a little bit. We know that every city and market is different across the country, but in the last month or so, there are a couple stories that have popped up in different cities like San Francisco and other large cities. Doesn't necessarily factor into Charlotte, but I'm curious as what's going on. The dynamics of commercial real estate, when you look at malls like downtown San Francisco Mall, Westfield pulling out, big stores, people aren't shopping in malls anymore, hotels there that are deciding to not pay their money to the folks that own the property there. When you look nationwide at what's going on commercially, where are we?
Well, that's a great question. We see a lot of headlines. A lot of them are disconcerting. I think the first thing I'd like to get across is that commercial real estate is not just a single monolithic entity. It's made up of a lot of different types of sectors. So you can estimate the size of the real estate market, the commercial real estate market, at about $20 trillion. That's with a T. And that's quite sizable in comparison even to the stock market, maybe half or third, depending on what day you're looking at it, the size of the stock market. Now, office properties make up only about 15% of that. The rest is made up of sectors that are arguably reasonably healthy, things like industrial properties. Even retail is not doing so badly, at least in some places, and the list goes on. So we are having problem with the office sector, and that's for the reasons you mentioned before. People are working from home. Office properties, it's not clear whether tenants are going to be renewing, and interest rates are high, so property values have come down.
You mentioned interest rates. They are at a high that we haven't seen in several years now, especially for anyone that is borrowing money. How does the higher cost of capital factor in to not only projects, but what may play out over the next 12 to 18 months, not knowing exactly when those rates will come down?
Well, the biggest question, the biggest impact that rising interest rates or cost of capital has on assets, on cash flow producing assets like real estate, is in pricing. So the interest rates go up, prices for these types of assets will come down, and that's because what would you rather have? Would you rather earn a 4 or 4% yield on an office property, perhaps, or a 5% yield on a treasury security? And so the fact that you'd probably prefer the yield from a safer security means that office prices or other real estate prices, other hard asset prices, have to come down. So the biggest impact interest rates have had on real estate prices is pressure on pricing. Prices have come down. The thing is that with real estate is not like the stock market. It's not like you can see the price of something going up and down every day. And if you're an owner of a property, you don't have to sell. So you don't have to realize that price decline necessarily. The only problem is that there won't be any buyers for you at the price that you might want, at the price from 2 years ago. So a lot of transactions have dried up. What this means is that any owner that is under pressure to sell is probably going to have to take a big haircut, a big discount on the value of the property relative to what they think it's worth. And banks are going to be a little wary of financing and refinancing properties at the values that they were willing to do that, say, a few years ago.
So what happens, Dr. Sagi, to some of these buildings, whether they're massive skyscraper office buildings or industrial buildings? What happens when they're vacated for a bit of time? Does that land, the building, does it still hold value? Is there value in repurposing, and how expensive is a project like that?
So once again, I want to go back to say that if you own an industrial property, chances are you're not going to have to vacate it. Chances are your tenants are going to want to keep being there. They're going to want to re-sign. You may even be able to raise the lease rate on them at a pretty good clip over the next few years. So industrial properties are doing just fine. Office property, that's a different story. Even if you have a fully leased building, it's not clear whether those leases are going to be re-signed. Many of those tenants may not even be there and trying to sublease those properties. Those kinds of properties are hurting, and when it's time to refinance them, again, the bank is not going to give them full value or the value that the owners wanted from a while ago. And to your question, what is the value of these properties? It's the value at which you'd be able to sell them, and that's going to take a discount. Can they be repurposed if nobody wants to come in as tenants? That's a very tricky question. So Moody's did an analysis last year suggesting that only about 3% of New York office properties would pencil out. In other words, it would make economic sense to actually try to repurpose them into other types of properties or uses like multifamily, like data centers, things of that nature. So part of the reason for that is that office properties, after about 1950, the floor plates got so big that in order to have something like residential real estate, residential units around it, you have to build them around the windows, and those windows have to open. You got to put a lot of plumbing into these assets. That's extremely expensive, and at the price point that you'd be buying these office properties right now, even at a discount, it's just not worth it. Prices would have to come down substantially, even more, with office properties for repurposing to be widespread.
The math on that doesn't make sense sometimes. Dr. Jacob Sagi with UNC Chapel Hill, we appreciate your insight. And I told you before we talked we wouldn't have enough time to even scratch the surface on all the dynamics, but we certainly appreciate your expertise here.
Well, thank you for having me.
Thank you.
All right.